Hi guys, what's up? My name is Brandon, and I'm going to walk you through the process of how to buy land and explain the financing options that are available for vacant lots. This buying guide assumes that you've already found land that you want to make an offer on and purchase, but don't worry if you haven't found land because I've already posted a great video explaining exactly how to search for the perfect lot. One major difference between buying an existing home versus undeveloped land is how you determine your budget. Usually, when you're buying an existing or single-family dwelling, your mortgage lender will determine your budget based on the information about your income, debts, and down payment that you provide them. When you're buying undeveloped land, you'll have to back calculate your budget for the lot by first determining your total budget for the entire project. Once you have your total budget for the land plus the build, you can subtract out the build costs to determine how much is left over to spend on your land. You can figure out your total budget for the entire project by speaking with a lender who specializes in construction loans. And you can determine your projected building costs by talking to multiple builders in your area to figure out the price per square foot. You'll also have to factor in soft costs, which include architectural plans, site map, engineering, and building permits into your build budget. The whole point of this exercise is to ensure that you don't get into a situation where you can own land, but then you can't afford to build what you originally wanted. I'll go through my personal lot purchase as an example of how to calculate your budget. So I spoke to a mortgage lender and found out that the total amount that I could borrow for my entire project is $870,000. I also had $70,000 set aside for my down payment on the land. I interviewed several design build firms and I got solid quotes for building my short-term rental for $300 a square foot or $700,000 including soft costs and contingency buffer. Then I subtracted the building costs from my total budget. Then you can see that I had $240,000 that I could spend on the land, and I ended up spending $230,000 with $70,000 down. In some ways, buying land is simpler than buying an existing home since you don't have to worry about potential issues associated with an aging structure. However, there are fewer lenders willing to finance empty lots compared to existing homes because there's a higher risk to the lender that you'll stop making payments on your loan if money becomes tight since you aren't depending on the empty property for housing. Note that interest rates for undeveloped lots are higher than rates for existing homes, but I wouldn't worry about it because you can always refinance your loan into a more traditional mortgage with a lower interest rate once you complete the build. And some construction lenders will actually absorb your land loan into a new construction loan anyways. Before you go out and make any offers, you should have a solid idea of how you'll be financing your purchase. I'll now go over the options available, starting with land loans, also known as lot loans. These loans are specifically meant for the purchase of undeveloped land with the assumption that you'll be building something on the property in the future. There are seemingly fewer and fewer lenders who offer this type of mortgage, but your best bet are local banks and credit unions. I actually used a local credit union when I decided to finance my recent lot purchase with a land loan. Rates for land loans tend to be between 5 and 7% depending on your credit score, and it's common for the max term on these loans to only be 15 years as opposed to 30 years for existing homes. However, as I mentioned before, most people refinance the land loan into a construction loan or traditional mortgage after the project is completed, and that's what I plan on doing as well. Closing costs for land and lot loans are typically around 2 to 3% of the purchase price. Land loans will require an appraisal of the lot itself before approval. Not only will the land need to appraise for the full purchase price for the loan to be approved by the underwriters, most lenders will also require that utilities are already on site and that there are public roads in place. Option 2 is a HELOC or home equity loan. These require that you already own a home since they use the equity of your home as collateral. The loan amount is determined by the value of your current property, and the value of your current property is determined by an appraisal. Home equity loans are great because they have lower closing costs than land loans, and there are more lenders out there willing to do home equity loans. The interest rate on HELOCs also ranges from 5 to 7% depending on your credit, but avoid lenders with variable rates and annual fees. Unlike land loans, the appraisal fee on home equity loans is often refunded to you at closing. The downside is that your lender won't be doing due diligence on the actual land that you want to buy with the loan, so you will be responsible for making sure the land is buildable and free of any restrictions. You may be wondering why I didn't do a home equity loan for my recent lot purchase. Unfortunately, I had construction going on at my primary residence, so the bank wouldn't have been able to do an appraisal of my home. For the third option, all-in-one or single close construction loans are becoming more rare, but they still exist for building primary residences. All-in-one just means that you receive one loan and one set of closing costs for buying land and building your home. You typically have to build immediately after purchasing land with an all-in-one construction loan, whereas with land loans and HELOCs, you can buy the perfect land and build later. For all of these financing options, make sure you shop around to find the best interest rate and loan fees. Be prepared that it's harder to find a lender willing to finance land for a second home or income property, so don't get discouraged if you can't find a lender right away. I had to contact 6 lenders before I was able to get a loan to buy my land. I didn't mention it as a financing option, but obviously you can pay cash for the lot. I don't recommend you pay cash unless you plan on building on it immediately and then finance the entire construction cost. As a couple more tips, you and/or your lender must confirm with the local building and planning department that the lot is buildable so that you don't get stuck with a property that you can't build anything on. An unbuildable lot may be impossible to resell if you make a mistake. The preliminary title report should reveal if there are any issues with the title that would prevent closing, and you should have title insurance if anything comes up later. In my case, the seller had a lien on the property from 30 years ago that needed to be removed before we could close. So if you haven't already, make sure you watch my previous video on how to actually find land. I'll be continuing to make videos explaining the process of building a home from scratch. So thanks for watching. If you found this information helpful, please devastate that like button. And if you want to see more content like this, please subscribe.